Okay, this is Coach Mike from WinningStockCoach.com. Going to talk about the Apple 60-minute chart and provide a video that's really to be used as a guide to making trades off the 60-minute chart for Apple. We have another video that I've made for Fibonacci extensions, and we're going to use this video. This video is going to be a bit of an advanced channeling system. And one thing to understand about channels in general before we get started, you have to have both an up and down move before you can establish a channel. Our advanced channeling system, as I'm calling it, is one where our channels are actually going to continue to change. And I don't mean to confuse you there. We're going to call it a progressive channeling system. And it will be a system that is designed to protect profits once in a trade. Okay, so we're going to start on the 60-minute chart. We're going to go to drawings in our Thinkorswim and click on channel and get ourselves established with a channel we can trade. And we're going to see here, we're kind of getting some flat moves on Apple here for the 60-minute chart. With that being said, we don't want to trade flat. But as we start to get another move, we can come off this flat period, connect to the low, go to the prior highs, and you see we went from a very small channel into a breakout from a channel. Now at this point, we can make our entry, and I wouldn't say you'd want to make it with this bottom channel line as your stop, but I'm also going to say you don't necessarily want to make it with this top channel line as your stop. Remember, you need both an up and down move to establish a channel, but many times that first trade is going to come on a breakout when you're monitoring through consolidation. So we're going to see, as we kind of establish things here, that that prior top channel is seeming to hold and give us a positive move off of it. Now, you could even say that at this point, this might just be where you want to start your channel. Maybe this is where you want to start your trade. And I would say that's okay. The only problem I would have with that is those of you that hang out in the chat room will know that some people aren't that patient. They want to always find a reason to trade it. So I'm going to try to work with you on a reason, not necessarily to trade it, but to trade it properly, that you can understand where your risk strategy would be. So you do see that it held that prior channel that it held, and we're going to progressively move our channels in a way that protects profits. Okay, so with this system, one thing we want to understand is we want to be what I'm going to call 3 weeks out for an expiration. What I mean by 3 weeks out, if it's a Monday, Tuesday, Wednesday, we don't want to be trading options that expire that same week. We also don't want to be trading ones that expire the following week. But the week after that, that's where we want to be. And we can really trade based on that Monday, Tuesday, Wednesday. As we get into Thursday and Friday, we're going to have to go out to one more week from that. So it would actually be, 4 expirations come Thursday or Friday from that week's expiration, but you'd only have that day or two left before the current weeks would expire. So we want to be 3 weeks out. You're going to see as we start to progress here, we're not at first getting that solid up move, but at the same time, we would not have yet failed this previous channel. So when we're wrong, it's okay. We can be wrong and wait for a visible up move, which we actually get here. When we get this visible up move, let's go ahead and mark it. And we don't, with a channel, we don't want to have any prices outside of our channel. Now, the worst part about this trade so far is, had you entered it, you literally went sideways an entire week, and it would have driven you nuts. Well, if you trade by any rules that you learn at WinningStockCoach.com, you wouldn't only be in that trade, because we don't put all of our money in one trade. The other thing to understand with your targeting using this system is if you're trading off of this breakout, you're probably going to want to trade really close to the money, if not in the money, not having another target area to go off of. But if you wait until you can effectively make a trend line, your strike price is going to be one that goes in the money at the opposite line of your channel. So in this case, let's say you would have bought it right here, and we'll go back to it. Let's say you would have bought it right here. You would have been playing like an $89 call. Now you might say, well, that's going to be expensive. Well, just buy one of them then. Or wait for a channel that's got more room in it. But for this trade, I would say, an 89 call is going to give you the best chance to make money. So as we go forward, we're going to get going in this channel. And I also want to point out this 50% line, this dash line I have on my channels. That's going to come into play just like the 50% rule comes into play for nearly any trading system you can think of. If we struggle to break above that 50% line and begin to pull back from it, we can use that as an indication to sell, expecting it to go back to the bottom line. And if it made a positive move back off the bottom line, buy it again. But what you'll find more times than not with channels is when you fail to break the 50% line, you're probably going to fail to hold your bottom line. So to clean up the chart, I'm going to remove that old channel, and we would be in a trade, like I said, on 89 calls based off of this channel. Now remember, with our focus group, and Apple being one of our focus group charts, we want to be able to make several different trades. Now, you could find with these progressive channels that your several different trades might all come off the 60-minute chart. So here's one thing we need to look at. We got up into our upper line, and you notice we're in the upper side. We're above the 50% line. We may not want to just let this fall down here. I mean, that would be a $2 fall. We could use the 50% line as our stop. And we also have to use the time, as in, our expiration. If we were entering back here, which was, on May 23rd, it's a Friday, we would have been actually 4 weeks out. We wouldn't have been trading the May 23rd expiration. We would have been trading the, actually that's a Monday. We would have been trading 2 weeks past that, so I'm sorry. Anyway, as we get moving along, you see that we start to struggle with our 50% line. Now that 50% line to me is more important on bigger channels. This is a pretty tight channel. But here, as you start to move below that 50% line, you have to say, well, shoot, I could probably fall to, about 88.30 or so, which would be another $1 from that 50% line failure. In most cases, this was where I would actually just exit. If you entered down here on an $89 call, you're still in the money. It's moved $2 for you, and you've made a profit. Now, sadly, the next day comes and you open up like this. But ironically, with these progressive channels, we're going to always work off of our last point. You've got a new low. A new low and a whole new stop. And as we progress, we'll still take into account that original channel until it's broken. And by the way, on this entry, even if you bought it here, you'd have gone, 3 weeks out and taken something for $91, maybe even the $91 call. Now, as you can see, this other channel gets broken, but you're going to start to see something on the chart. First off, you hit right at your line, you kind of pulled back from it, so you could look for a pullback. But let's now start to look for what could help us targeting a little more. And this is the channel that we just got rid of, but the reason I'm putting it back up here is this would be something we would do for larger channels to give us a better establishment. So as we continue, this is a fairly tight channel. You see we hit the top line, we pulled back from it. Well, we would take winning trade number 2 right there. And now we've broken below our channel. Now if you remember at the start of the video, I said we needed both an up and a down move to establish a channel. We're not making a trade here. We need an up move to establish a channel. We're getting the up move, but we haven't clearly pulled back from it. And I want you to start to notice something that you may have already missed if you weren't thinking. Was this not all an up move? And this all a down move? This channel's gone. It's already been used up. And right here, you should have already been looking on this candle here at an entry on something that would go in the money by 92.76. Now the funny thing here, and I purposely did that to get you to kind of pay attention to the rest of the video. The goal of this with the focus group is to actually look for reasons to trade it, but justified reasons to trade it. You didn't really pull back here. If you look at it, you stayed in the same consolidation range for 2 days. Here, you did pull back. That makes this all one up move, this all one down move. It may have just been what you should have been waiting on all along to make the trade, because those other 2 trades, even though they were winners, would have been much smaller. And now, as you can see, our channel's a little bit bigger than what it has been for the prior trades. Now, as we get moving along, you see we begin to progress. And it's funny, even though that 50% line keeps inching higher, we continue to hold it. And as we continue to hold it, we continue to establish a better stop point for us if we want to use that 50% line. But as the trade progresses along, you might begin to find that you could indeed allow the whole channel, because as time goes on, that bottom channel line will eventually become higher than your entry, so long as the channel continues in that direction. So at this point here, already being in the trade for what would have been about a week and a half, I would have looked at the exit. And this could have been profiting trade number 3. Now notice here that you haven't broken out of this channel yet, and you're still moving in an upwards direction. So when you made the exit, I wouldn't necessarily say, oh, now I got to play puts. I would wait for a down channel to play puts if you're using a progressive channeling system or any type of channeling system. Now, ironically, even though I would have sold here when it closed below that 50% line, you're going to see that it looks to start making a move up. In fact, on that move up it's looking to start making, this candle here could give me another buy for something that would be in the money by $94. Now notice I'm still within that other channel, so it's going to have to stay there until it's broken. Here you see we actually break above this shorter channel and hit right at our top line of this channel and begin to pull back. Now that could be your exit point, or you could wait for the continuation on the next candle, which you got. But at this point, this channel's got to go. You just took winning trade number 4, but notice the details here. You see how that wick broke above it right there? you might want to start watching for a new entry point. Where could that entry point come? Well, let's just mark these up and down moves. And even though we have all these wicks here that hold within it, this one goes above, so we're going to come all the way up to that point. And we're just going to watch for an area of where we could buy again. We're not in a trade at this point. And that's one thing important to stress. We're not in a trade at this point. Not really making the visible move, still sideways. Hey, we kind of came down to this channel line I just drew. Now if we can get some positive movement above it, which we didn't, we can make a buy. But in this case, we didn't get it. We'll remove it. We're going to still watch this old channel and be looking for an opportunity based on it. You can see it actually put a wick down below it. Well, that could mean we're changing channels. That could mean we might need to look for an up move, because before we'd want to go short, we would want another up move. It could also mean that it already made the up move and we didn't see it, but now it's failed out of that channel, which made it a missed trade. So at this point in time, not in a trade, you've had the 4 winners. Now the other thing to look at here, just like I discussed a moment ago, you go up, you went sideways, and you went up some more. That's all one visible up move. So as this begins to progress, first off, like you'll hear me say with anything, wait for the positive movement. At least break the high from this candle that stopped the pullback. So we're just kind of projecting here on, hey, this channel might hold, but we really haven't made the up move. And thank goodness we're not buying. Now at this point in time, get this channel off your chart. But did you notice other potential channels that may have presented themselves? Now the reason I'm doing this here, you see how tiny these channels are. There's not even a full dollar move between the high and the low of them. We don't want to trade those. If you want this system to work to a greater degree of success, you need to trade established channels and then progress them along. So remember, we've just had the 5 winning trades. Now let's look at something here. As we come along to right here, and I had to zoom the chart out because I didn't have enough that I could see. I was trying to do it a little too small, but anyway, at this point in time, we're at the same candle point that we left off on, and we're going to be looking, hey, well, you know what? We went up, we went sideways, we went up, some more sideways and up. That's all one visible up move. That's a visible down move. Do we maybe have a new channel here with a high point here? And on this morning star, be able to trade number 6 to about a 92.90 target area. And remember, when you're looking at it here, you want to play a strike that, I mean, I know that that line's going to still go up. And, you know, if you're sitting at 92.90, 92.80, you could say, well, I'm going to go ahead and take the $93 call because I'm playing 3 weeks out. And that's understandable. I'd probably personally still go with the 92, but I would understand that action. So here we go. We got to continue on the morning star. And we're starting to move along. Now, as you're in these trades, I use, and maybe it's not the best term for it, but I use what's called, a base channel and then my progression of channels. When I start to see these moves, many times I want to start making other channels. What you're actually going to find is, if you're smart, is Coach Mike is actually backtracking through a section of the chart he was already at. So let me get to the section we were at. Yeah, so that messed me up a little bit, but that was a good lesson learned in paying attention. Anyway, getting to the point we were at was actually right down here. And what I was trying to get, but I was zoomed out too far from it, is to be able to visualize that up and down move. Now, if you notice, you got a couple things you could be running here. You could have a channel down there that you're watching for. But as you start to make the new highs, you're not going to always catch the bottom. And I wouldn't force something that's trading primarily sideways until it makes a new high, which was right in this area. But to buy from that point, and now let's go ahead and zoom this back in where we can see it a little better. Now that we have the right points on the chart, that'd be right in here. Now this would be the channel that I'd mark, but I wouldn't want to enter that trade till right here when it pops above this last high. Now at this point in time, what strike am I looking for? Something 98, 98.05, 98.07, 98.08. So it'd have to be like a 98 call, something to go in the money should it come up here and hit this channel. As I start to move along in this trade, one thing I want to do is be able to protect myself. How do I protect myself? Well, you notice you go up and you do some sideways. You go up and you do some sideways. Why not find a channel that I can use that progresses along with this? So, my base channel or my major channel, and now a sub channel. As you get below it here, in this big of a channel, that's almost like a sell half opportunity, or maybe just exit the trade. You're going to find that a lot of times channels will retest when they're broken below. But at that point where I failed out of that sub channel, that progressive channel, I've already made from here to there almost a $3 gain in the stock. $2 we'll say. I've made profit. I can get out about 3 days after the entry. And you're saying, well, you told me to trade 3 weeks. Yes, because we might still be able to go back to that strike. Because what you're going to find in this study is that 3-week plan is something that's pretty well taken for you from this bottom touch to the top touch, where you could usually hold all of this. And if you wanted to hold that, that's fine. You could assume that, hey, I'm still in that trade, or I just took winner number 7 and I haven't had a loss yet. But had you got out and it was going sideways, right here you make another new high. You could run a new progressive channel, make your entry as it bounces and makes the new high. So you could have already taken win number 7, or you could still be in win number 6, or trade number 6, I'll say. But we got that progressive channel. Now you notice we hit that top line, and we pulled back from it. We already have it established as a top line. Well, if you hit your top line, that's your target. You could have just taken win number 8, or still be holding trade number 6. But you notice it fails out right here, nullifying this channel, but still keeping you active in this channel. So now we wait for a positive move, or you're still holding trade number 6, and you're going to find another progressive sub channel here, And as we start here making this move above the high, we see, hey, there's a $2 move to be made there, or about $1.50. You see we pulled back from the 50% line. This could have made this a loser for the short term trade, but also if you were still in the one, you could still be holding that one. Let's continue to follow it along our channel. Notice the struggles at the 50% line. From here and down in here, and especially when you retested it and pulled here, even if you held this one from all the way back here, this is your exit sign. And now you start to see something different. You notice this? At first you may see this, but each candle is giving you a new high. This is going to nullify channels really quickly. I always like to make my channels off of bottoms when possible. In which case, from this bottom and then this bottom, I had a top to look for. Now, if you want to have a higher win percentage or chance at a win, don't say, hey, just because that could go up to there, I'll play calls. Say, hey, I'm going to wait for it to go there and play puts, because that line's going to keep getting smaller as long as it's in this sub channel. So let's start turning around, and you know what? You broke out of it. So be it. It's okay. You maybe look for an opportunity here now that you've broken out of it, where you won't see much of a calls trade there. I would leave that channel on my chart. This one's nullified. It's going to be removed. But I would also take into account my move from the major channel or the base channel and subsequently what I'm seeing. So even though I probably wouldn't enter this here until it broke that down channel that was a sub channel, I've got a little channel here, but I've got a new larger channel to establish a more firm foothold trade on. Now my little channel failed, and you can see I'm still pretty much going sideways, and that's fine, because the more consistent you'll find, or the more consistency, you'll find, is in the fact that, okay, so what if you stopped out of a little trade here? It would have been a little loss. But as you progress with the channels, leaving active channels, meaning ones that haven't broken, in place, seeing that, okay, I've already crossed the 50% line at the open, there's not much room here. Trading breakouts or bounces, let's watch it there, you will find a string of longer and shorter term trades, but I would always keep myself 3 weeks out. Now look at this here. You come down, you kind of hit it, and you gap up from it. Now if you would have made continuation from that gap up, I'd say, oh yeah, buy those calls. You notice where it came to, it went right to the 50% line and pulled back from it. When you get close to your 50% line, you got to kind of look at that as a target. And when looking at that as a target, you'll start to find when a trade is decent to make and when a trade maybe shouldn't be made. And in this case, that gap up would not have you rushing into it. Now, if it would have gapped to where the candle closed and started going up, I'd have said, hey, there's still a dollar move there. Go ahead and trade it. But using that 50% line can help you a lot, because what you could end up finding at times, getting another failure, and another failure here. So looking for an up move Now at this point in time, I mean, had you held this one, you'd actually been 1 day from your 3-week mark from here. And in this one's particular case, you'd have been too far out of the money, which gives you further reason to use that 50% line to assist you. Now, one thing I want you to see is we got a down move that failed some channels. It even put this one out of the question by going below it. So I wouldn't have said, ooh, it could bounce here, let me play calls. It failed that absolute low. So we had our down move, we wait for an up move. We would have a loss in the loss column for sure. But we did have 7 wins. Now, when I get a clear, continual down move, not sideways, you see how I've kind of built a little bit of a consolidation. I can visually see this. And I want to start to establish the channel. What I'm going to be getting here is actually pretty important. I want you to notice not the absolute prices so much as what really counts in this scheme of highs and lows. And one thing that you could be looking for is the fact that, okay, I got a visible up move, a visible sideways move, a visible down move. I am still looking for an up move to complete so that I can look to a potential short type trade. But is it maybe possible? Is it maybe possible that I start to establish a channel like this that's maybe a little too tight to trade, or visible up move? Gotta make sure I don't have any failures out of it, so I've got to go on any point that fails it, use that to come up through it, and establish a new channel. Now, I'm still going to tell you at this point I wouldn't be in a trade on it. This system requires a little bit of patience, but remember how we started out talking about using a breakout to enter a trade? Well, let's look at this breakout. When it broke out of this little channel, it also broke that 50% line of the old channel. You can see that dashed line here, giving you an entry at that point in time on what would have been something that'd go in the money by $98.85, or you could have said, just a $99 call. I'd prefer you stay something in the money before the target though. And as you progress along, you begin to find something else that should start to serve as a little bit of interest for you, where even though you made that entry, and sometimes we've got to make entries even if they're not always the best entry we could make, because we don't know always if stocks will go up or down. We have to have a system to help us. Now notice here we get a little sub channel that we can use, another progressive channel. So it starts to come down, but it can still keep us in the trade, because each candle that goes by that new progressive channel is getting higher. Now another thing to look at is another new progressive channel. As we begin to climb and climb and climb off of it. Now we still have these other channels intact because they have not been broken. And remember, here's our major channel. This one here is the major channel, the one that's caught the brunt of it. It's the longest time frame one. We just got up to it and hit it. And not only did we hit it, we pulled back from it. Even though we would have at this point had 2 losses, 7 wins, we would have just taken winner number 8 because it held in this channel. Now, as we continue, I'm not one to say that in an up channel something's going to go straight down to 94, because it could just go sideways. Look at all this sideways move. Sometimes stocks go down by going sideways when using channels. That's something to understand, because as this starts to go, if it's still in an up channel and you are channel trading, you don't want to get caught. You'll hear me say it all the time. There's a difference between maybe I can make money in the trade and I have a higher probability chance to make money. But let's give it some credit. What happened here? Down move, up move. And you got a sub channel here. The next day you gap down right at that line and you fall further. This is a trade that you could enter on the puts play because you did have a breakout move. Now, you're still going to look for this bottom line and try to establish a new channel to use, which at one point in time would have been here. And you see that you actually break above it here. This wouldn't have been a big winner, but it would have been winner number 9. And also, reason to start looking for another potential calls trade off of your major channel. Now, you're not always going to get it right away, and I don't think you should be trying to, I'm just going to jump in it because it made a green candle. The chart still gives you some high and low points where you can visually see, am I breaking that last little high point? And if not, make sure it's not going to hit your channel. Look at that right there. You just nullified the channel. As you nullified that channel, you actually began to see, wow, in this grand scheme of things, I might have had another channel altogether. And maybe I should be looking for a top, not a bottom. And as it begins to establish, you have to wait for a top to play puts. Well, guess what? You just broke above the channel. When you break above that channel, you've nullified the channel. There is a difference between a trade you might make money on and a trade with a higher probability to make money on. And when you nullify a channel, you have to begin to think that channel might not exist. So here we are at this point, and you can say, you know what, haven't really found a trade. I nullified my down channel with that one little wick, so I missed this down move of just a couple bucks. But you know what? I just broke my prior high. Well, here's all one up move. Maybe that's all one down move. Let me put my channel on it. And as I broke the prior high, I know where my stop is to start the trade. That's the riskiest point of it, because man, this thing gaps up the next day. Oh crap, there it broke. You mean to tell me I need to let that thing fall $2.50 before I stop out? No, not necessarily. Because the assumption here is that every candle that goes by, this line, which kind of looks horizontal but is slightly up, will continue going up. And as it continues going up, you'll begin to establish a new progressive channel. Where will that progressive channel be? Well, you see we're going sideways, it kind of looked like we popped up off of it enough where we could run a progressive channel. Now remember, we bought here and Murphy's Law kicked in. It went sideways for 2 days after you bought. But you got a new progressive channel that from this point on will make sure that you make profits. so long as you stop out should it fall below the channel. There, you touched off your channel, you touched off of it again, right at it, and you see here where you made the channel failure. This is going to be a point where I would stop out of this trade. And then what does it do? It turns around and pops up and then falls back down. Makes you pretty angry. What it didn't do though is fall all the way back here, and it allowed you to make $3 profit, or the equivalent of whatever your contracts would have risen on, $3. Because this channel's nullified, let's take it out of the equation. And let's begin to watch our 50% line. The other thing you can do too is, because you're above the 50% line, if you didn't want that shorter term channel, use your 50% line as your stop. So you either just took winner number 9 or 10, however far we are, or you're still holding that trade. I would be one that say, hey, why don't you always take the winner, get that failed channel off there, and start to watch for something like this, where you could say, off my bottom, is this maybe my new progressive channel? And you can re-enter that trade. And at this point, by the way, you'd be looking at like a $100 call. Now notice you're getting real close to the top of this major channel, the one that's been in place longer, but you just broke it. You just broke it, and you're right at the top of your sub channel. So at this point in time, you're probably grinning from ear to ear, and you're watching for a clear indication of a pullback from this upper channel. Now, with that being said, let's make sure we have a clear indication of the pullback. Right now we're going sideways. Here, I'd say we got a clear indication of the pullback. You've got one of two choices here. You could let it continue in the channel. You can see that from this point, when you're looking at it, it's like, well, I could hold it here, maybe let it give the 50% line, but I definitely don't want it to drop all the way down to 92.60 or 98.60, because that would be like $2 lower than what it is right now. The 50% line, again, seems to have saved you. And here, right here, may indeed have had you exiting I can't quite tell, it might have closed right at the 50% line. I probably would say you needed to exit there personally. And again, remember, this channel's gone. This channel's still active. I'd be watching for a bounce point, looking for a bounce point, trying to find the opportunity for one of two things: a breakout above it, or a touch and positive move from the bottom. So a breakout above it, or a touch and positive move from the bottom. Now the other thing to look at is if I cross my 50% line, I still got from about $100.83 up to 102. So still a $1 move if I really wanted to force that trade, and my stop would be any close below the 50% line. But for me, I'm more inclined to want that bottom. Now here, you come right off of that bottom. You gap down at the open, you start moving positive right off of that bottom. This is going to be a buy for trade number 10. As you begin progressing, you see you get up into your 50% line, and as you get up into that 50% line, you pull back, but it's not the first candle of the pullback you always need to sell on. When you break the low points of your top candles, that's usually a sell point. But when you're equal to them, you wait for the continuation, which you didn't get. And here you find yourself gapping up to the 50% line, closing right at it, breaking above it momentarily. I hope you notice, kind of closing right back down below it. No visible representation of a pullback, but this candle might have got you. What it also would have got you is, regardless of where you might have sold it, was a win, even though that win might have only been about a $1.25 move. But it still could have been win number 10. Now let's see if the line catches it, which it doesn't. Once that line doesn't catch it, we are in a position where again we have to wait. And it's okay to wait. We want to be using visible up and down moves. And you see we're still going sideways. There's nothing wrong with waiting on sideways. And as you begin to develop in the channel, you can kind of watch and play along and just be able to, as you're watching it in real time, that's when the emotions settle in, that's when it's hard. But even though you're still going sideways, you want to break above this high over here, you start playing with where your channel could be. Here you break above that point. Go ahead and make your buy. Oh, but I could have had a lower buy here. Yeah, you'd had a pretty unconfirmed buy and not the same probability in the trade. From this point, you'd have been playing something that would go in the money by 103.79. As you progress along, you see you get into your 50% line, you look to pull back. Now this next day, you gap down. That kind of sucks. The first thing you got to look at with that gap down is where you are in relation to your bottom channel line. Did you fail your bottom channel line? And even though it gapped down, it didn't fail the bottom channel line, which becomes very, very important because it could mean whether or not you stop out of this trade. You get your continuation, not even into the 50% line yet. Now here, as soon as this fails below your channel line, which was probably just seconds after the open, you would have sold. But you would have sold at a value of about $102.90. And you'd have been buying around $101.20 or so. That would be profiting trade number 10 with 2 losses so far. And the sad part about one like this is it'll be difficult with the channel system to catch this on your 60-minute chart. If you're trading the 15-minute chart as well or some other time frame of chart, you might find a different buy. But in reality, you got to sell when it fails your channel. It failed it. It protected you from taking that loss because that would have turned your winning trade into a losing trade. You protected yourself. You made it a winner. And now you're waiting for a visible up and down move before making another trade. Now, you might say, hey, I got these tops right here. You could have, at this point in time, you'd obviously be waiting for a puts trade. Right off of here, played another puts trade. You hit on your bottom line. The next day, you gapped up above it, right to your 50% line. that would have stopped you out of your trade. And had you going flat since. So even though this type of system will require some patience because you won't always be making a trade on it, if you wait for the visible moves to make your major or base channel, and then from that point make the sub or progressive channel within it, it'll help you trade up and down within that major channel. And though not always in a trade like some of the other systems, it would have produced 11 wins and 2 losses over the last 90-day period that I've demonstrated in this video. So this is Coach Mike with winnings.coach.com, just trying to offer you a little assistance in finding some trades on our Apple focus group chart using the